Is anything in China domestically enough to offset all of the fear and the reticence of people overseas saying, I want to deploy in China right now? Because the case is building that they shouldn't necessarily do that.
I think you're absolutely right that the risk is mostly from the external side. There are people who are naturally worried about geopolitical tensions. They worry about weaker external demand. They worry about all this tech decoupling, etc. But internally, China's economy is still recovering quite strongly. So we've mentioned about consumption. We mentioned about infrastructure spending in the first 2 months is actually quite strong. You can see from the loan numbers, the corporate long-term loan, which is a lot of been driven by the infrastructures, is actually better than expected. And we have the triple cuts, so they will continuously to be supportive on that front. And we also want to make the point that the property market is also stabilizing. As we said, if you look at the run rate for the first 2 months and also first 2 weeks of in March, high frequency data, we are actually seeing the contract sales improving. So firstly, in the secondary housing market in the first tier and second tier cities, and now we're seeing the broad-based primary housing market is also showing some recovery. Again, there is some base effect in it. We don't expect this market to be overly stimulated, but in general, we're seeing that the run rate is quite healthy. We will see for the full year, we probably will see some year-over-year increase in the contract sales and investment catching up close to flat on the year-over-year number for the full year number. So comparing with last year, this will be much less of a drag to the economy as last year. So we net, it's all positive still.
How strong can the Chinese consumer be if they don't start spending in the wake of rising unemployment, especially among the youth?
Sure. So there's two elements of the consumption part. The first one is we immediately saw after reopening that business-related consumptions, catering, etc., they have a very strong rebound immediately. This is obviously very positive, but still there are still some distance from their long-term growth trend line. And then there is also a mass consumption segment, which we think that's recovering gradually, because when people are seeing better visibility of their income growth and visibility of their social safety net, etc., they will coming back gradually, more step in step. So mostly in the second half, I would say. So in general, we think that the consumption still have a pretty steady growth this year.
So basically, buy now for that H2 upside.
Yeah, I think the risk reward for the China market is still quite attractive. The valuation coming back to discount to its long-term historical average and also to other markets. Yes.